All right, guys, we are here with my great friend Tim from Blend Wealth. Everybody knows Tim as Alexis's husband.
That's true.
And we are here on the Bulls in Business show to number one, just have a conversation. But Tim obviously has spoken a couple times at Bulls in Business, and what we're really trying to get the podcast to is having 80% of the time I want to get local people on with local businesses so people can hear about their businesses, give you guys an opportunity to get some content, right? But then also I want the audience to see what you guys do to see if it's a good fit to do business with you guys, but then also learn. Like I want them in this, 45 minutes to 5 hours that we're together today. Now this isn't the Joe Rogan show. I want them to learn some stuff, right? So that's what I'm really excited about. And we kind of go all over the place. Like this is going to be a conversation, but for me, I always like to say like, where are you at now? Then go back to the origin story. What's the future look like? But, would just love to hear about your story with Blend Wealth.
Yep.
And thanks for joining me today.
Yeah, no problem at all. You know me by now, like I'm education first. So if people just hear this and take some nuggets away to apply to their practice, that's great. If you want to continue conversation, that's great too. But Blend Wealth is an accounting and wealth management firm. There are four of us. We started almost 4 years ago now. So, and our niche is really with business owners. So specifically business owners that have revenue between 1 and 20 million. And so our taglines, we manage your entire financial life. So really where our heart is there are a lot of great accounting firms out there. And those great accounting firms know almost nothing about personal finance. And there are a lot of great personal financial advisors out there that know almost nothing about what your CPA and accounting firm knows. And so that's kind of a gap in the marketplace where an entrepreneur needs both. They need someone looking at their business finances. They need someone looking at their personal finances. But that leaves them in the quarterback position of trying to manage two different entities that don't necessarily know what the other side's doing. And so it's kind of like a mom and dad in an argument and the client's sitting there who's right, who's wrong.
Right.
My CPAs tell me to do this. My financial advisors tell me to do this. So what we want to do is just kind of bring all that under one house to really cater to entrepreneurs where we know both sides of the equation, because accounting is more historical. That's what happened in the past. Finance is more what's happening in the future, and cover that whole timeline for entrepreneurs. And we will be the quarterback. So now we are your single point of contact to manage your entire financial life. So that's really the genesis of Blend Wealth.
Yeah, and the accounting, when did you add the accounting? Year and a half, 2 years ago?
It's 2 years ago now.
Okay.
And so we added accounting. I'm an entrepreneur myself, and all I'm trying to do is love on my clients the best way I can. And what I was finding is clients were coming to us and said, hey, Tim, we really love what you're doing on the personal finance side, and we don't really like who we're working with for accounting. They're not responsive. Can you refer us to a better accountant? And I tried to find strategic CPAs. My heart was not to bring this in-house. It was really to find other good accounting firms. And I couldn't do it. Every time I thought I would find someone, before you know it, they would be at capacity or their service levels would drop off as they add new clients. And so I found my partner, Andrew. He was leaving corporate accounting to start his own firm. And we just had lunch, and from that first lunch, we hit it off. We had the same worldview on how to treat clients, how to do it, what I'd say a low client volume but high quality product on a subscription basis. And I just said to him, I said, man, I was just looking for a CPA referral source, but would you like to join us? And we kind of had some subsequent conversations, and he did. And then his wife, who's a bookkeeper and payroll specialist, wanted to leave corporate America as well, so she joined. And so that we just kind of, it was by accident, or you could say maybe it wasn't by accident, maybe it's a God thing, brought us together, merged, and now we have accounting and personal finance all under one roof.
Yeah, and Andrew's a great guy. He's actually a real person. Most of you guys that interact with Andrew, it's over email or maybe some phone calls and stuff, but I've seen him live. He did come to one of the Bulls in Business meetups.
He's got a newborn right now, so he stays close to home. And of course, we're a virtual practice right now. Service everyone from Alaska to Massachusetts.
Really?
And all the way up to Michigan to Miami, I kind of say. So most of our clients are out of state anyway, so they don't mind a virtual relationship. So, but I always love it when we have local clients, because it's always great when you can meet in person and have that personal connection.
Yeah, absolutely. And let's talk a little bit about how we met.
Sure.
And I might not get this all correct because I'm old, but I think it was you said 3 years ago is when you started the business.
Yeah. So most people know me, know my journey, but like I was divorced and I was looking for a new church home. And I actually had a college friend who we know, James, in common, who's like, hey, just start coming to church with me. Like, you can come sit with my family. You come to lunch with us after church. And it was actually coming to church with him and getting involved there that I found your men's group. And it was the summer of 2018 that we first met. And so, like, you were literally at the very beginning before Blend Wealth was even an idea. We had met. And then after it became an idea, you were one of the first cheerleaders to kind of like water that plant for me. Even when I had some hesitations, it turned out like you and Alexis were absolutely correct on like us creating our own business. And then it's just kind of blossomed from there.
Yeah, and that's like a side thing that I think is what so many people love about you and Alexis is you guys doing business together. You guys do life and you do business together, right? And I just think it's such a beautiful model. It's something that I take a lot of pride in. I actually was just having a conversation the other day with somebody, and I mentioned it to Kelly, and the guy, young entrepreneur, and he was asking me, how do you get into some of these rooms and you don't feel intimidated, by their wealth or their success? And I said, I had this mindset shift, and it's a little weird, but when I walk into the room, I think nobody's going to be a better husband than me and nobody's going to be a better father than me.
Yeah.
And I work really, really hard at that, and I try to be super intentional about that. And I think that you do an absolute amazing job of that. And then when I walk into a room like that, it's like I just ain't on myself, right?
Yep.
So like I'm not trying to be something that I'm not. Right. So, and I think when we met, going back to when we met, I remember it was like, it wasn't week after week, but it was probably pretty dang close. It was like, man, guys, massive prayers. Like Alexis and I are going out to Colorado to get married.
Yep.
We found our house of our dreams, but it was in the middle of like houses were on the market for 2 days and then sold for 25% over asking, and then starting the business. Right. And it was like you guys did like 7 years worth of life. And I feel like what type of time period was there between marriage, Blend Wealth, and the house purchase?
So the idea of Blend Wealth started, so we met in summer of 2018. The idea happened in 2020, and I've said this publicly many times. Alexis was the one who really had the vision, and I was risk adverse. Like my background's in engineering. Like this was not something I was comfortable with the salary I was making at the time. I do love the idea of entrepreneurship, but I was not comfortable with the financial risk. And it was talking to you and others in the men's business group, along with Alexis, that she just kind of. Honestly, she just took the bull by the horns and just found other people who had done it and then set up calls and like, we're talking to these people today. I was like, okay. And so as I just talked to more entrepreneurs, I got more comfortable with my business plan. And then it was the summer of 2021 that we literally left to go to Colorado to get married in the Rocky Mountains. Before we left, we toured a house that it was the best house we'd ever seen. There was no way we were going to get it. And we prayed at the men's group for it, left and went to the Rocky Mountains, got the call literally right before I walked down the aisle to meet Alexis that we got the house. And then we came home and quit our jobs and started the company.
So it was all. Yeah, it was all. I thought that was the case, but I didn't remember. When did you tell Alexis about the house? Like, because I didn't know that part. Like, did you like, hey, before I say anything, just to seal the deal, make sure you don't back out. I got the house.
I remember distinctly there was in Estes Park, there was a hotel, and I had just got my suit on to get ready and everything. And I was sitting there waiting on the word that she was ready so we could head inside Rocky Mountain National Park to get married. And I remember just sitting there, and I got the call from our realtor, Trent, who's a really good friend of ours. And I sent her a text. I was like, I don't know if you have your phone by you or not, but like, we got the house.
Yes.
And then I got like a heart emoji
Dude,
or something
that's
back.
so
And
epic.
then that was just a great way to walk down the aisle knowing one that you and I both married up and have such a great, amazing wife in our future, but then that we had a house to come home to.
Yeah, that's exciting. Well, and I think while I know your story, right, there's stuff that I'm picking up that I didn't really know before. And I'm going to tell you something that might hurt your feelings, but you are still an employee. You just work for Alexis now. I do. So
I tell her all the time, I'm not ashamed to say it either. Like I'm a numbers nerd, like through and through. Like if you just fed me work and I could crunch numbers and present them all day, like that's what I love to do. That's how I'm built. So Alexis is the CEO of the company. Like if it weren't for her looking out 1 year, 3 years, 5 years, we would have no vision for a company because I'm just head down to working. And I pop my head up to like eat and breathe. And that's about it. So like, I think any good CEO needs to be a visionary.
Yes.
And I am not that. And that is Alexis. So I'm happy to work for her.
Yeah. Well, in talking about that head down, almost like employee mindset, right? I think that's really a good kickoff part on what you want to talk about today, right? Where, it's like, how do we exit whatever we're doing or that employee mindset and get to blend status, like get to the point to where you're at $1 million and you're able to be a blend customer, right? Like not that everybody's going to be a customer, but I think that's a really unique mindset and thought process. But like, tell me your thoughts on that.
I believe entrepreneurship is a gift for everyone. And I think in society today, like entrepreneurship, I don't know if it has a stigma to it, but like it's not something that's highly sought after. Most people want to go to college and get a good corporate job with great benefits, and they feel like that's the least risky thing. But as a Christian, biblically, all the jobs were entrepreneurial jobs. 100 years ago, you had the family farmer, you had the family business. Like there were no big, massive corporations in the history of man historically. That's kind of a new thing,
right?
And so, and I'm in that situation too. Like I was risk adverse, and so, but I do think that for those people who join it, like no one really goes into entrepreneurship that I have met who regrets it, because the amount of just freedom you have for your family. I think entrepreneurship is a blessing for your marriage. I think it's a blessing for the time you have to pour into your kids, whether or not you want to homeschool or just go on the school field trips or be present and just flex your schedule. I work more than I've ever worked before, but I can be at every event for my kid because I'll just do the work at night. I don't have anyone to report to other than Alexis.
Right.
So if I'm not at my desk from noon to 3 p.m., I'll just get the 3 hours in later that day. And that's fine. As long as the clients have their deliverable on time, that's fine. So I want to really encourage people that entrepreneurship can be this journey that you think it's more risky, but it's actually less. Like the risky thing is working in that cubicle for 40 years, asking for a cost of living raise every year, and just busting it at work. And they're like, hey, great, thank you, get a 5% raise.
Right.
But all of a sudden, you can go in entrepreneurship and your company can increase 400%, 500%, 200% year over year after year. And all of a sudden, you're making more money than you ever have. You have more time flexibility than you ever have. You're pouring into your marriage like never before. You're pouring into your kids like never before. And it's like, wow, this is amazing.
Yeah, and there's so many different, and so if owning a business is a train, there's so many different entry points in to jump in, right? Like whether it's franchising, buying a business, starting a business, whatever that looks like. And the other thing that I would say is, plug for Bowls in Business, right? The Bowls in Business monthly meetup that we do, the monthly groups that we do. Because if you're somebody that you have that idea, you have that dream, you want to buy a business, Bowls in Business is a safe place where you're going to find people that'll be there to bounce ideas off of you and, help take that idea to actually an actionable thing. Or maybe it's looking at the numbers, because just like you talked about, anybody that reaches out to me hey, I'm looking at buying this business, I just don't know what I'm looking at. I'm like, send me the numbers, because it's it's like playing a video game. I get so excited just about looking at the numbers and trying to break it down.
The numbers don't lie. But let's talk about, so we've got, to me, I kind of view things in 3 stages. The Father, Son, the Holy Spirit, a lot of good things happen in 3, right? So let's not overcomplicate things. So we have where you are now as an employee to salary replacement. That is that's your first stage in your entrepreneur journey. Is how do I leave and replace my salary? And then after that, you have salary replacement to growing and scaling your firm to $1 million of revenue. And then you have $1 million and beyond. And there are just different things you can do. So in that first stage, if you're currently at your job and not happy or thinking about it, there's a few different entry points. But a side hustle is very, very good. Just pick something you're passionate about, something you're interested in, something that you think that just God has designed you with the strength that you could do better than what's done in the marketplace. And how can you grow that side hustle to 70 to 80% of what you make now? And then once you do, your time to quit. That does come at a cost, a side hustle, meaning you're going to grow slower because your time is less committed. Alexis and I, we ultimately chose to rip the Band-Aid off, and we just left. And we went from making what we were making to nothing. But there's a certain amount of motivation, certain amount of wind behind your sails when you have no income coming in. Like you're on a different, the house is on fire and you got to put it out. And that kind of, for us, it was motivating. I'm not saying it's for everyone, but like that's what worked for us. And because I had every minute of every day to think about how to grow our clients, how to better serve our clients, we were able to reach salary replacement very, very quickly. And so you got the side hustle, you got just quit and start, and that does require an emergency fund. Like, do not do that with zero cash in the bank. Like, that's a recipe for disaster. So plan for that if you're going to do it. And there's like buying a franchise, buying an existing business, something that has an existing framework that the bones of that business are good, or the systems of that franchise are good, and you just have to implement that system or improve that system to reach salary replacement. So those are like the 3 ways I think you can really
absolutely
get there.
Yeah, that's great. And if you don't even have your first like real job, that's such a great time to jump into business ownership as well, right? Yeah. And build. Maybe you are taking some classes, maybe you're not taking classes, right? Whatever that looks like, just start somewhere. Because even if you fail, you're going to learn. You're going to learn a lot about how to operate a business, how to look at a P&L, how do I get customers, right? How do I close those customers? How do I fulfill what I'm closing? All that stuff.
That's right. So like when you start, like you want to keep your expenses to the bare minimum. Like Alexis always says, and I agree with her, like simple scales and fancy fails. So keep things as simple as possible. It's all about cash flow. It's all about cash flow. And like this is where I think Bulls in Business comes into this, because in the early stages, you don't have a lot of disposable income. It's kind of the shoestring budget. Like, how do I provide this product or service in a way that's high quality for as little amount as possible, so I can cash flow things? And I think that's where joining a mastermind group, whether it's paid or unpaid, joining like-minded entrepreneurs, either in your industry or even in different. There's so much to learn from people in different industries. And so like attending a monthly Bulls in Business event where there's 100 other entrepreneurs or people getting into entrepreneurship there, that's going to be so encouraging to you, because our pastor says all the time, like, show me your friends, I'll show you your future. Like, if you want to be a successful entrepreneur, like, you got to get in a community of other successful entrepreneurs and be hanging out with them. So like you can't hang out with your broke friend from high school and drink beer and watch sports all day.
Right.
Like that season of life has to come to an end, and you have to pivot to something else. So get in that community, keep things as simple as possible. And then I'm not saying you're ready to outsource marketing or accounting, but like there are a few things on accounting. You have to set aside money for quarterly estimated payments. So it's like so many first-year entrepreneurs get their first tax bill and they're like, I don't have any cash in the bank. It's like, yeah, you don't have to have cash to have made a profit.
Yeah, that was the guest that I had on last week, Robert. Yeah. When I was asking for some advice that he could share, he's like, number one, he's like, when you're a new entrepreneur, like make sure you understand how much money the government's going to ask for, and be setting the money aside.
So like if you do nothing else, take 20% of what you're making each month, set it aside in a separate bank account that you will not touch, and then wait till you talk to your accountant at the end of the year. And please, please, please have someone prepare. You have outgrown TurboTax if you're in entrepreneurship. I like TurboTax. I think it's a great product. It is not for entrepreneurs. So find a CPA that can do your taxes. Have that 20% already set aside. That will go very, very smoothly for you. Now, when it comes to marketing, I'm not a marketing professional, but I'll tell you, like, someone told me this and it very much resonated with me. Like, marketing, if you cut it down to like its bare bones essential task, it's telling your story as many times as possible to as wide an audience as possible. Like, that's literally it. And so in those first years of like getting to salary replacement, like you should really be spending 75-80% of your time telling your story to as many people as possible in as many ways as possible, whether it's social media, blogs, in person, cold calls, like whatever you can to just meet people and make a good impression on them. You will find that like eventually you will start making traction and people will start believing what you're actually saying. Like, oh, that person does provide accounting services. That person does provide personal financial services, and they are good at it. Like I've heard them for 14 months talking about it. I like what they're saying, and then people will start reaching out.
Yeah, and I've really found just by working with a lot of people over the last 6 months, year, that a a lot of it, your strategy on what you're going to do marketing and client acquisition wise depends on, and I mean, this is obvious, but it depends on how many customers you need, right? So if you're an organization or, you're a solopreneur and you just need 10 clients, like I need 10 to 20 clients paying $750 a month for marketing, whatever that is, correct, videography, editing, whatever. What I've found now is getting content out is extremely important. But man, like build your schedule in a way where part of your job is 2 hours a day, 3 hours a day. I'm going to be setting up meetings. So it's like every morning, and I did this with Peter, and it's been working really, really well for Peter, because like I've done this a little bit with my coaching business as well. That's where the idea came from a book I read, and I've been sharing this with people. So what Peter did was, because Peter, like, he loves the technical aspect of the branding and the design and the web design and stuff. Well, if you get caught up in there and if you're in that world all the time, it's like, well, somebody's got to bring the customers in.
You're right.
Right. And when you're the business owner, you're the salesperson and the operator in every position. You got to put that salesperson. So, and this fits for really, I think, anybody that's trying to get 20 or less customers. So you build out your schedule in a way where, let's say 8 to 11 o'clock Monday through Friday is my meeting times. Then part of my job is I have to fill that up with interesting people that I want to have conversations with. The other thing I would say is, don't think I want to meet with Tim because he's a potential client. Meet with anybody, right? And go to Noble Coffee or Everbowl. Those are the only two places approved to have meetings at. No, lots of great places to have meetings at, any coffee shop around town. And then just have a conversation with them and then serve them greatly in that conversation, and then let them know what you're doing. What are you working on? They're going to ask the same thing. And when they ask the same thing, it's actually, I started this coaching consulting business, or I do videography work, or I do marketing, or I do web design. Do you know anybody that might need that? This is what I do. Here's what it looks like, right? And those face-to-face meetings, man, like they're going to perform so well. And you're gonna get to that 10 to 15, 20 clients a lot quicker.
Correct. Yeah, I absolutely agree with you. I've kind of used it on other podcasts. I kind of say, like, Jesus is the best marketer, right? Like, he went and found disciples, and then those disciples went out and told their circle of friends about the good news, right? And that's exactly the approach. So Alexis and I did this in early days. Like, do not meet with people to convert them to a client. Your goal is to leave them as a disciple. Like, hey, like I met Alex last week at coffee, and he's doing XYZ, and now all of a sudden 6 months go by, and they run into someone in their own circle of friends who's has a problem or has an opportunity, and they're like, you know what? Like 6 months ago, I had coffee with Alex, and like you need to go talk to him. Let me make that introduction for you, and that. It really, like, just go create disciples. Yep.
And it's so fulfilling, right? Like, just it's doing business the right way. So
it is. And all the marketing things work. Like, meeting with people works, blogs work, social media works, cold calling works. Like, all of them work, but they don't work if you're not consistent at it. So I just say, pick something that's in your natural strength and stay consistent at it, and you will succeed.
Got it. Love it. Okay. So we got a business. We're rocking and rolling, right?
Yeah.
We're hitting that first threshold, let's say 300,000, right? Like usually that's when somebody can kind of handle it with themselves in a small team, but where do we take it from there?
Yeah. So it's funny you say 300,000. I always say $250,000 because usually someone's like, I want to make $100,000.
Sounds cooler.
Yeah, it does. So you get to $250,000 of top line revenue, and chances are you're six figures in net income, and so then you're like, okay, great. So then
I'm gonna tell people to start communicating like, what kind of money you want to make? I want to make $1/1000,000.
It's funny, yeah. So you're at salary replacement, and now for the first time, you should be in a place where you actually have some disposable income. And depending on what your business is and how many clients you need, you could be reaching capacity on what you are able to do in the time limited to you. And so now we enter phase 2, and it's team building. Like you do not have enough money to like bring everything your business needs in-house. Like that's not the stage you're at. But you are at a point where like you need marketing help. Unless you're in a marketing business, that's not your expertise. You need accounting help. There might be things operationally you need. And so now we start to talk about like, hey, what could free up my time to do? I always say like, think about things that's $1,000 an hour. Like pretend you value yourself at $1,000 an hour. Only do the things that's $1,000 an hour work. all the stuff that's $20 an hour work, you need to find a way. Either hire someone inside, that could be also an opportunity for a virtual assistant. I think virtual assistants are fantastic. Clean up your inbox, contracts, any administrative stuff, any repeatable process stuff. Have the virtual assistant or have a team member join and do that. And then you can go sell. You can provide the actual core product or service at $1,000 an hour rate.
Yeah, and pause on that real quick. We were talking about it with Alexis out there.
Yeah.
Before we came in here, and I like the world that we live in now. There's so much opportunity to bring people in on a fractional basis.
Correct.
So it's like you have that world of fractional employee, like whatever you want to call it, fractional help. And then you have the internet, then you have AI. It's like it's never, in my opinion, been easier to start something because like
Absolutely.
you could operate like you're a $10 million business, even if you're, a third of a million a year, bringing that in with a virtual assistant. Because guess what? It's like, hey, I can hire you for 5 hours a week right now because that's what I have. But they can grow with you, right? So
it is. Like, what can you automate? There's people out there. Zach's a perfect example. Like someone who can automate your process. There's Zapier out there. There's AI, virtual assistants, fractional chief marketing officers, fractional CFOs and accounting firms like us. So now it's time to spend money wisely, not recklessly, but wisely spend money to round out the strengths you do not have. So that now you have a company that it's like a rubber band. You're pulling it back and you're ready to unleash it on the marketplace. And so like if you're not good in accounting, now you have a fractional accounting partner who's an all-star at that. Now you have a fractional marketing person who's an all-star at that. You now have a rock star virtual assistant doing administrative tasks. And now you're poised as a team to go expand your company. Maybe it's expand services, maybe it's increase your price for your service, and make a path to go from that quarter 300,000 revenue to $1 million.
Yeah, love it. Yeah, and you mentioned something about pricing. That's something that I'm pretty passionate about, and just as I've learned later in my career, the idea of we don't have to service everybody. Correct. Right. And, you want to have yourself at a price point to where I can not only help the customers that I want to help, but I can pay my team to be able to do it and continue to have the type of lifestyle and the freedom that we talked about at the beginning. Because what happens is people come in because they want freedom. And then when they hit this second stage is when things get wrecked because they're probably underpriced. Yeah. Honestly, like they understand. I mean, they either don't understand and build a team around them, right? Or they're underpriced and the money's not there to be able to build the team around them, right? But either one of those is going to be a massive constraint on their business.
If you're closing 90% of your prospects and you're out of capacity, your price is too low.
Right.
So you probably should be closing 60, 70%. And so one of the easy thumb rules I have for business owners in this stage of their life or their business is take your revenue divided by how many clients you have. That's your average revenue per client. If anyone is under that, they get a price increase or you need to graduate them away from your firm. And what you're going to find, not everyone will take that deal. Like if you go back to those people who are under that average price and you increase them, some will stay because they see the value and they realize they've been getting a good deal and they're willing to pay market price because it's still a win for them. And then other people who may be just price oriented or don't have that budget at the time, they will leave. And when they leave, two things are going to happen. More than likely, your revenue is not going to change. It may even go up, but your capacity, like you've just created maybe 25, 30% more capacity in your firm, and now you can keep going to the next level before you need to hire that next team.
And when you say that, because I love the way that you said it, because I feel like the way that you said it really makes it way more simplified. Sure. Are you talking annual revenue or
let's take a super easy example. If you have 100,000 of revenue, you'll have more than this, but we're doing an easy example, and you have 10 clients.
Got it.
That means your average revenue per client is $10,000.
Got it.
Per year.
Got it.
Per client. If someone's paying you less than $10,000 per year in this example, they're paying you $8,000, their new price next year is $10,000.
Got it.
$10,000. And you just raise everyone up to where everyone is at least paying your average revenue per client.
Well, and where your business can become an absolute machine is when you can identify what the lifetime value or the annual value. I prefer the annual value. Is the way that I like to look at it. Basically, the way that you're explaining it. It's funny because like your calculation just makes it a lot easier. So I'm gonna use it but so it's like, okay, what do I make annually off of each client?
Yep.
Right. And then what's it cost for me to acquire that customer?
Correct.
Because then it's just like, oh, okay, I'm going to make $500 per customer annually, and it costs me $35 to get a customer. How do I fix this problem where I don't have enough customers? It's like, go spend more $35 over and over and over again. Like, what are you going to do? Meta ads, like, more cold calling, whatever that is, whatever you're currently doing that's already working. Alex Ramosi talks about more, better, new.
Yep.
That's that more, better. It's like, do more of what's already working. Maybe you could do a little bit. Maybe you can convert better, right? It's like, I get 100 leads. 20% of them show up for the calls. Out of the 20, I'm going to convert 5. It's like, okay, how do you go from converting 5 to 10? Right. So
take your annual revenue, divide by your clients. That's how much revenue you're making per client. Then take your marketing expense divided by your clients. And that's how much it costs you to acquire a client. And hopefully that's less, a lot less. And then I do get this question a lot sometimes. Like people are like, well, I don't spend any on marketing. Okay, great. How much time did you spend marketing for the company, and what hourly rate do you want to apply to you? So if you're like, hey, you're $150 an hour. Okay, great. If you spent 10 hours doing that times $150 an hour, that's your marketing. Now divide that by your clients. Now you got your cost of acquisition. I do like lifetime value. I don't use it a whole lot because when you're an early entrepreneur, sometimes you don't have the systems to record your statistics, and sometimes you don't have enough information to even know how long that client's going to stay there. So like trying to figure out their lifetime value, if you're a 3-year-old business and the average client will stay for 5 years, you don't know that yet.
Right.
But if you put it on an annual basis, like everybody gets
No, I prefer it that way as well. I like it. I like it. Good.
So we're in the middle stage. We've built our team around us. And then just from a Blend Wealth perspective, this is when we get a lot of calls because people, for the first time of their entrepreneurial career, are making good profit and having good cash flow. And then they go in for their next tax season and they're very uncomfortable with their tax bill. And that's usually when we get the calls like, hey, Tim, like, hey, I made $600,000 of revenue last year, and like I made $150,000-$200,000 of profit cash flow, and man, I've never had a tax bill like this again. And so that's another reason why you have a fractional accounting firm or something like that. Because like from our side, when you are in this second stage from salary replacement to $1 million, we start deploying tax strategies for your firm. So it's kind of like, hey, how is your entity set up? Have you heard of an S-Corp election? Do you need an S-Corp election? That can save you 15.3% on your taxes if that situation is applicable. Are you doing the home office deduction? What are you doing with your vehicle? Do you have any business use for it? Are you reimbursing yourself for that situation? What about meals? What about travel? Like we just have a whole checklist of like 70 plus tax strategies that apply to business owners. And we're not trying to implement 70 plus tax strategies, but what we're trying to do is go through that checklist with all of our clients and say, what's the low hanging fruit where we can 5 to 10 tax strategies we can deploy to really make a meaningful difference in your business. Because for the first time you have this income, let's reduce it to the legal minimum.
Well, and a lot of that, I'm just thinking about this in real time. A lot of that is really front end loaded. And what I mean by that is when they go through it the first time and get those strategies rolling and stuff, the next year they already know what they're doing, right? Like, so it's
Correct.
like, it's not as painful every year. Right. And bottom line, like if you're doing these types of things and you're able to save a percentage here, a percentage there, I mean, that stuff's massive. I think you shared the other day that a lot of times people miss, they're at the end of the year, they might not have made money because they've paid themselves a salary and they had a debt payment.
Correct.
Right. And they get hit on that debt payment on a tax bill. You want to talk about that a little bit?
Yeah. So this is what happens when you make a mistake in stage one. Like when you are just starting your business and you're trying to reach salary replacement and you do not have enough of emergency funds set aside. And some people find themselves, or you do not set aside enough quarterly estimated payments. And so all of a sudden you find yourself on an IRS tax plan after that first year in business. So what happens is we've met salary replacement. We've entered stage 2 to where we're trying to grow to $1 million. And what we're finding is we have debt, either tax debt or other credit card debt, small business loan debt that we have carried with us. And so on paper, we made $200,000 of profit, but our bank account's at zero. And so that's a situation where like every business owner needs to be cognizant that profit and cash flow are not the same, but both need to be monitored because now you're going to be taxed. You're taxed on your profit or your net income. You're not taxed on how much cash is in your bank account.
And I want to pause there because like I just know people get crushed on that, right?
Correct.
Especially when they're just getting started. So an example is your electric bill for your office is a deduction.
Correct.
Your credit card bill from your expenses and things like that.
Yeah, when it comes to debt, only the interest is deductible.
Correct.
So if you made $200,000 of profit and you had a $200,000 debt that you paid off last year, so your bank account, you made $200,000, but your bank account's at zero, and you're like, why am I getting taxed? I made no money. Oh, you made money. Because that debt payment was not tax deductible. So, this is a situation where, like, if you're in that stage 2, you need that accounting partner with you to explain this to you. And honestly, if you're finding out about this at the time you're doing your tax return, like, you've waited too long to hire an accounting partner, because like this should have been easily foreseen and planned for before you got to the end of the year. So like, that's why building this team is so important. And I'll tell you, like, I'm going to pick on a portion of your audience here, because the person who really makes the most mistakes here, I feel like the most, is the do-it-yourself person. And so this is a person who, they were very successful in the beginning because they bootstrapped everything. They did everything. They can wear a lot of hats. This person, these are your engineer, accounting, your numbers-oriented people in life. They're very, very detailed, and because of that detail, they were successful. But then they keep that same mindset, and you don't have enough hours in a day to build a growing, thriving firm yourself. And so you need to just understand, like, you're not great at everything. You're gonna have to relinquish some of that responsibilities to a team. And so sometimes these DIYers, they're the ones that get surprised and some of this stuff, because they've done it all themselves and they don't know what they don't know.
Got it. Yeah, that's good. What and this might be something that you don't have an answer for right now, which is totally fine, because if we don't like the way it sounds, we just cut it out.
Yeah.
But like, there's obviously a lot of people that come to you guys that they're not ready. They're not at the stage to actually be able to work with you.
Correct.
Right? What is a really good solution for them to make sure that they are protecting themselves in that journey up to where they would have enough revenue to be able to work with you guys?
Yeah, the best way in the early stages is set aside 20%. Is that a perfect number? No, but it's going to be close enough that where you won't get in trouble. Set aside 20% of your net income each month for your taxes. Do your bookkeeping. So bookkeeping in plain English is taking your bank transactions. And I'll just say this, you should have a business bank account and a personal bank account, and those two should never be commingled. So I'm talking about your business transactions that come out of your business bank account. Categorize those transactions. You can do a download dump into Excel or Google Sheets and categorize them as meals and travel and expenses. That's fine. It's not the best, but it's fine. There are some free bookkeeping software solutions out there. I don't specialize in these, but there are bookkeeping solutions out there that are for the solopreneurs or do-it-yourself, and just hook your bank account up to that bookkeeping software, and typically they'll have a predefined amount of categories there that make it easy for you, and just label everything. Because at the end of your year, your CPA who's doing your taxes, and even if you don't hire someone for bookkeeping, do hire a CPA to do your taxes. Your CPA will want your financial statements, and they'll want how your expenses are categorized. And then the next thing after they do your tax returns, they're going to tell you how much you owe. And you're going to already have that side account set aside with 20% of your net income to pay the bill. So do that at a minimum, and you will not get yourself in trouble.
That's good. Yeah. And Owen obviously just bought a business in September. So he actually, after our lunch today, we're going through everything and finalizing everything. We're actually relieved because we found out Honeybook, which is the main platform that he uses, he could still put his expenses in there. Good. They just don't do the P&L statement, which we don't need because we have the money in and the money out and properly notated and stuff. So he's thankful he doesn't have to go learn something new. But it's actually been, for me, it's been a great learning experience that I've been able to help other people with when it comes to accounting. Like you said, a solopreneur, somebody that's just getting started, right? It's like the basics of doing that, just like you would with your home budget. So
it is. It's just own budget. And the cheat code here is like, if anyone wants to do this, pause it here. And when you get home, not while you're driving, but like when you get home, just Google Schedule C, IRS tax form Schedule C. That is a very popular tax form for small business owners. And on that sheet, there's going to be what your income is, and then it's going to ask you what your expenses are. Right in the middle of Schedule C is what your expenses are, and there's all the categories right there.
Nice.
Like, was that your home office? Was that your vehicle? Was that your mileage? Like, and those are the categories that you'll want to categorize your expenses in if you're doing a Google sheet or Excel sheet or whatever. And then at the bottom of that sheet, so you got income, all your expenses, and your profit. You're not going to pay the lowest possible tax bill if you don't know what all your expenses are.
Right.
So you have to record them. If not, then whatever your income is going to be what your profit is, and you're going to owe a large tax bill. So at a minimum, do the bookkeeping yourself.
Yeah, and Relay Bank is obviously, I know that's who you guys recommend.
Yeah.
Relay Bank has something where, it'll request a receipt if it's over $75 spent, right? So just like different tools like that. If you're going to bank with something like Relay Bank is built for small business.
It is.
Perfect bank for that.
And, they have an app, and you can you can take a picture of your receipts. QuickBooks also allows you to take a quick picture of your receipts. You can also put them in Dropbox or Google Drive or iPhone with a album for photos. Just like every time you got a business receipt, just take a picture of it, keep it. If you're ever audited, you have a list of all your receipts. It's super easy nowadays. It's not like you have to keep a shoebox and have it for 6 years. I was just going to
say, you can get rid of that shoebox.
You can get rid of it. Yeah, just do that. And then, so at that point in time, like, hopefully we're getting to the point there. We're like at stage 3 now for those people that are $1 million or more.
All right. Stage 3. We're cranking. We're ripping.
We're cranking.
We haven't destroyed our marriage while doing it.
Nope.
Right? So it's like we're doing the right steps along the way. We've got $1 million plus business. Where do we go from here?
Yeah. So the calls we generally receive when you have $1 million revenue or more is most people they've mastered the basics. They've mastered their product and service. So they're very, very comfortable there. Now things are like, the growth is not linear. It's exponential, right? Like and so like now they're like, hey man, like dollars are coming in I've never seen before. Clients are joining. Onboarding is happening faster than ever. Like I have so many moving parts. I have no way to make decisions. Like it's almost too much of a good thing. And they get paralyzed. And like this was what we were finding with some of our business owners, that why we started offering our fractional CFO service. It's like, hey, we need help forecasting. Like I need to know, like, if revenue keeps up like this, how am I going to hit in the year? And how many people do I need to hire or can I hire? Because like prior to that, I hate to say it, like some people look at their profit loss statements, but a lot of people just look at their bank account balance to make decisions. Like I've got $300,000 in the bank account, so I could maybe hire someone, one person, but like that's it on the forecasting side. So like what we want to do is like go through their expenses with them and just forecast them out to say, if you hired one person, what if you hired them in July? How's that look for your profit? How's that look for your cash flow? What if you hired them in August? What if you hired that second person in December? I mean, that's what we're doing for ourselves right now at Blend Wealth. And how does your marketing expense, like, does it need to go up with your revenue? Does it need to go down? How's your overhead look? So like everything that's not payroll, it's not marketing, it's not depreciation, amortization, is overhead. Like that's like the catch-all bucket for every other expense.
Yeah.
But even though you don't necessarily have to go line item by line item on overhead expenses, you can still forecast what that bucket is. Like they all kind of average together. And then at the end of that, you get what is my profit and what is my cash flow? Because where this starts to differ is the business owner also starts to ask is like, I know I have this much profit. How much can I take as a owner's distribution?
Am I allowed? I love that part.
Yeah.
I love that part. It's really fun.
It is.
It's a fun part where business owners are cranking and they're like, I'm allowed to pay myself this money. And
like I just paid myself, to them would be a very mediocre salary. And they're like, okay, man, me and my wife, we'd love to take out something. We'd love to get a new car, take a family vacation. Can I take this owner distribution? But what if I do that, am I not going to leave enough money in the company to maintain it? And so this is where like we found a need to where you start to go from 1 million to 20 million, that CFO role. And most people at that time cannot hire a full-time CFO to come in their business. They may have hired other team members in at that point, but usually the C-suite, you can't just like burden the business with a whole C-suite of overhead of executives. So at that point in time, it is really growth management, forecast. And we like to forecast 1 year, 3 years, 5 years out so that people can make decisions today, decisions in the midterm, and then decisions for like what I would call the long term, which would be 5 years out. And then along the way too is some of those business owners will say, how much is my company worth? Like, I just want to know, like, can you,
Right.
so like we've been able to like bring business valuations in house to say, you know, I'm not a professional valuation expert, but we do have software to help out with that, to say, you know, within a very small, narrow range, I think your company's worth this. And then the other thing some people want to know is like, you know, I did this for a really good exit. Like I just wanted to 10x, you know, my investment.
Yeah.
And so, because you do have those serial entrepreneurs, right? Like as soon as they get the idea up and running,
Right.
it's proof of concept and it's got feet, they're kind of bored. So it's like, okay, how much can I exit out of this for, and then take my next idea and go do another business?
Well, and I think planning that in advance, and what I mean by that is if you want to do an exit and it's going to be 2 or 3 years down the road, talking to an expert early.
Yep.
So you're already working on the pieces that need to be in motion for yourself financially. So when that exit happens, because obviously there's going to be a large sum of money that's going to be coming at one time, and you want to keep as much for the home team as possible in there too.
Yeah,
So,
the absolutely worst way to exit is decide that year you want to exit and then start looking for, like, everyone wants 2 to 3 years of historical financial statements and or tax returns. Right. And so the problem this becomes as a small business owner is, in order to pay the lowest legal tax bill possible, you have been converting as many personal expenses to business expenses as possible and put them in the business. And that lowers your taxable income and that lowers your tax bill, which has been fine for you up until that point in time, except that that's exactly the opposite of what you want to do when you want to sell the business. You want as much profit on the bottom line, and because most things are valued as a multiple of the bottom line profit. And so you've almost shot yourself in the foot. And so a lot of times, like, this is where you like need to be very strategic about your exit. So sometimes we will say, let's take your operating company, and we're not lawyers, so like this is just educational. Please consult your own legal counsel. But like we see where people will take their operating company and they will make it its own LLC, or it's already its own LLC, and then that business owner will create their own holding company. And what happens is now all the profit distribution from an operating company come into the holding company, and then you can do a lot of your personal tax saving strategies at that holding company level, and then pay. So now you're paying the lowest possible tax bill, but then your operating company has a very, very high profit, and you set it up for sale. But you want to do that 2 or 3 years before the sale happens.
Yeah, that's great.
So yeah, there's a different strategy for each stage, and this is why like you need someone they kind of like shepherd you. Like most business owners know their product and service. Like they own that territory, but they're not experts in marketing. They're not experts in legal. They're not experts in accounting and finance. So you need those team members to really have the best possible outcome.
Yeah, I love it. Love it. Love what you guys do, and you know who you guys are as well. And you guys are great stewards of people as well, right?
Yeah.
Like, and I know you always thank me for the people that I send your way, but honestly, it's like, I trust you guys with, you know, obviously I trust you with my own family.
Yep.
And you know, you guys always do just an excellent job of taking care of people. And, you know, we were actually, you know, we just talked about, you were at TJ's this morning. Yep. I was there yesterday, and, you know, TJ was feeling discouraged, and he said he talked to you, and you were like, man, you know, looking at different industries and looking this and that, like, you know, you're doing really well, buddy. And I was like, hey, you know, Tim would tell you if you weren't, you know, and that's what you need, right? Like you need somebody that's going to be in your corner, to, you know, not just be a cheerleader, but then also like show you the data, right? Like actually show you the data. So
I've known at a young age that there's two things, like God made me with two things. I'm good in math and I like helping people. And like, if I won the lottery, I don't play the lottery, but like if I won the lottery tomorrow, I would still do this profession, because I like you mentioned earlier on, it's almost like a video game. It's like a solvable problem. It's fun for me to like see businesses thrive. And I truly, back to the beginning, like I truly believe entrepreneurship is just one of those where there's like no downside to it. Like your marriage thrives, your family thrives, right. Your income thrives, your flexibility thrives. Like if you will put in the effort, like there's really no bad outcomes.
Yep. Absolutely. And another good principle in that is like, just get started, as we talked about when we started this. And the other thing about just getting started is if you're going to fail fast, right?
Fail
fast. And if you fail fast, probably you didn't have a product or a service or an offering where you didn't have a starving audience.
Yep.
Right. That's something that Alex Hormozy talks about, right? Where it's like, if you were selling a hot dog cart, what would be your dream customer, or what would be the dream thing? Would be like where you're at, the best tasting hot dog, the best price. It's like, no, you'd want a starving crowd of people.
Yeah.
Because then they're going to pay whatever the heck it is. So, so having something and getting in relationship with people, Bulls in Business, just ask those questions, right? Like, hey, this is what I do. Do you think it's something that's actually going to make money or not make money? Because if you're going to pour time and energy into it, it's really good to, what I always like to say is pray and seek wise counsel, right?
Yep.
Seek wise counsel, have some conversations with people. So what's next for Blend Wealth? Where are you guys going? You talked about the 3 to 5 year. What is the next what's the next 3 years look like for you guys?
So Alexis and I have a lot of decisions on this, and when we first started, I'll be very transparent. Like, we thought this would be a lifestyle business for us. We had no aspirations to enter in $1 million plus revenue. We thought, like, hey, we would build this. It would just be the two of us. We would have copious amounts of freedom and flexibility in our schedule, and we would have just enough clients to make that happen, and we would love that. But the problem is, one, I'm having so much fun doing it, and two, I see so many prospects coming our way that have not been served well with the traditional models of finance or accounting. And so you realize there are people out there that you can help, that if you just made this a lifestyle practice, you would they would languish out there and not have the benefit of you helping them. So this is where Alexis' vision as CEO, she's like, hey, we just have to find a way to duplicate ourselves. We need to duplicate you. We need to duplicate Alexis. We need to duplicate Andrew. So that's what we have started to do, is just hire and teach our principles and codify what we do in process and procedures internally. We've been spending the last 6 months rolling out an operating system behind the scenes that runs our entire enterprise, so that I can put all my thoughts into workflows that can be followed by team members that we train to produce the same results for our clients. So at this point in time, we're just going to open the floodgates, and as many people as we can help, and we will just keep adding team members to take care of that capacity.
I love it. And we're aligned on the battlefield, right?
Yeah.
Because what I feel like God's really put on my heart is to help help the good guys win.
Yep.
Right. Local business owners. I want to help them grow their businesses. I want to help people buy businesses. I want to help people start businesses, especially locally. Right. Really passionate about Hamilton County. And you're helping me to help people to be able to do that. And just super thankful for you guys. Thankful for your friendship.
Yeah.
All right. Once again, thank you for your time. Tim, let the audience know how they could reach out to Blend Wealth.
Yeah. Thank you again for having me on, Alex. Appreciate your friendship. Appreciate your mentorship all these years. But if anyone wants to find us, we're online at blendwealth.com. Upper right-hand corner, there's schedule a right fit call. What that's for is we just want to see if you're the right fit for us, and more importantly, are we a right fit for you? So it's kind of like a dual interview process, very casual, informal. Also on the socials, just at Blend Wealth on any social media. You can follow us and just take free education tips.
Awesome.